Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Roy Gori, CEO of Manulife. Roy, nice to see you.
Great to see you, and thanks for having me.
So tell us about Manulife. It's the big Canadian financial services company based in the insurance business, but now you do a lot of different stuff. Talk to us.
We do. We are a top 10 global insurer, but we also do wealth and asset management. We've operated for more than 130 years in Canada, but our business footprint actually spans across three broad geographies: Canada, the US, and Asia. We have a small presence in Europe. And a big part of our focus has been on obviously growing our business, but also transforming our franchise. And since 2017, we really went on this big mission to become the most digital customer-centric company in our industry, but we also knew that we had to de-risk our business and improve the returns. And that's what we've been focused on, and I'm sure you're going to want to talk about that in a little bit more detail. But it's really culminated in 2023 being a milestone year for us, delivering really strong operating performance, but also at the same time, really transacting on some big strategic moves that really changed our business footprint.
Yeah, in fact, I do want to ask you more about that. But life is still in the company name. So is life insurance a core part of your business? And how is that business?
Yeah, life insurance is a big part of our franchise. And yes, that business has been performing, really very well. The fact of the matter is that people don't have enough life protection and coverage. The pandemic reinforced that and the importance for greater coverage and protection. So that's a big part of our franchise and continues to be a part that is actually growing quite significantly.
And what's going on with demography and life insurance? First of all, are you in all those different geographies with life insurance? You talked about the pandemic, but life expectancy, diseases, drug use, what's going on right now in that world?
Yeah, well, a few things. Firstly, people are living longer, but they're not necessarily living healthier. So in 1950, the average American would live to an average age of about 69, and now folks are living to 81 years of age. But 20% of their life, what we'll call their health span, is lived in poor health. And there's a variety of reasons for that. But that is a big demographic push and change that is changing the landscape, and ultimately is something that needs significant attention. But for us, we're focused on actually trying to help people live longer but also healthier lives.
Right. How has that affected the returns in the business, though? Have you had to recalibrate the basis of your policies because of that?
Yeah, so we always have to look at the way we're pricing our products and the risks that we're undertaking. People living longer is typically a good thing for us as an insurance company. We want people to live long lives, and that's why we're quite in sync with our customer from a relationship perspective. We win if they live longer, but so do they. And we work quite proactively to help them live longer, healthier lives. But you're right, there is a risk element associated with people living longer and possibly in ill health. And we need to calibrate our pricing for that. We need to look at the risk management associated with that. And it often changes the kind of products that we're willing to offer. But that's what we're paid to do, and actually it's something that we do very well, and it's why we've been able to improve our returns quite significantly over the last 5-7 years.
Yeah, the largest insurance company in Canada, and you have an interesting long history in that country, correct?
We do. We have operated there for more than 130 years. The first presidency of the company was in fact first Prime Minister of Canada, which is quite interesting, but it basically is an institution that saw its growth not just within Canada, but overseas. So we went to Asia literally within the first 10 years of being incorporated, and we've been now in Asia for 127 years, in fact. So what makes us unique is that we operate across those three geographies of Canada, the US, and Asia, and our business is reasonably well represented across those three geographies. So it's almost a third, which again is quite unique. Many other institutions that we compete with have a very strong home market, and they're relatively small outside of their home market. For us, that's actually not the case. We've got a strong business. We're a leader in Canada, but we have a great business here in the US through John Hancock, where we offer a unique behavioral insurance product. And in Asia, we are a top 3 Pan-Asian player. And again, in Asia, what's absolutely critical is that you have the scale to compete, but also the brand and the reputation to earn the confidence of consumers and other key stakeholders. So we are quite a unique business given our footprint, but also business mix.
Yeah, let's talk about John Hancock because that's something that our audience here in the U.S. can really chew on. It's a brand that they know very well. You guys bought that company, what, 20 years ago?
Almost, right.
Okay, and so what's the story there? How has that been additive, and how does that fit into what you're looking to do?
Yeah, so Hancock is a great business for us. Again, it gave us that scale of a global insurer. You can't be a global insurer without having a presence in the US. It's the largest insurance market in the world, obviously the largest economy of the world. But it's also a market that is still very attractive from a margin and returns perspective. But we've decided and agreed that to compete here, because it is one of the most competitive markets, we have to be differentiated. So what we got very excited with was this idea of behavioral insurance. Our partnership with Vitality was at the forefront of that. And this, again, is this idea that we're aligned with the customer in that we want them to live longer and healthier, and guess what? So do they. So instead of the normal traditional insurance product where you will buy a policy and forget about it for 10, 20, 30 years, with behavioral insurance and our Vitality product here in the US, we create a way that you can actually interact with us and actually benefit from that interaction. And effectively it is that if you're taking actions to improve your health, for example, sleeping better, taking more steps in a day, being more active, eating well, we're going to reward you for that. Because you're a lower risk for us and we make more money off you, we're going to actually incentivize you through rewards. And that might be either discounts on your premiums, might be an Apple Watch, or it might be vouchers that you might get.
Would you be tracking someone on an app, for instance?
We do. The customer is able to track their progress, and they'll get those prompts for the activities that they've performed or activities that they could possibly perform. And then they get more actively involved in that. And we've seen that when folks do that, they end up living healthier lives, which is obviously something that's very rewarding for them.
I love it. You're going to pay me to exercise, basically.
Absolutely.
Right? Yeah, that sounds great. So you became CEO, I think, in what, October 2017?
That's right.
And the stock was lagging at that point, lagged a little bit. Since then, the last couple of years, it's outperformed. Why the lagging and why the outperforming?
Yeah, so we had to transform our business. You know, again, when I go back to 2017, we were, quite honestly, a bit of an old, stodgy insurance company, which is not radically different to what most insurance companies would be. It wasn't, very digital or customer-oriented company or industry for that matter. So we said that we wanted to really revolutionize the way insurance was done and digitize our business. But at the same time, we needed to de-risk our business and improve our returns. So our focus over the last 6 years has been about executing against that agenda. We had 5 key priorities that were really driving our attention. First was portfolio optimization and the allocation of our capital towards higher returning businesses and de-risking ourselves from the low return, high risk businesses. The second was a focus around expenses and efficiency. We realized that we had to get better at managing our expenses and driving greater scale and efficiency benefits. We freed up about $1 billion worth of expenses and improved our efficiency ratio from about 54% to 45%. Third was around driving our high potential, high performing businesses and having them grow at a faster pace than the rest of our franchise. Asia, wealth and asset management, our US Vitality business, for example, and our group benefits business in Canada were our focus areas, and we grew those at a faster pace. On the digital and customer side, we improved our Net Promoter Score by 22 points over that period of time and really digitized every interaction that the customer has with us. And then on the people equation, the last priority, we realized that to win in the long run, you need to not just have the best people, but the best culture. So that's also been a focus. So all of that sort of was a big part of our attention strategically. And in 23, we saw ultimately, strong operating results. We grew our core earnings per share by 17%. Our sales metrics were double-digit growth. And then we did a big transaction in December that really underscores the fact that we were, really a very different company to the one that we were before.
What was that transaction?
Well, we did a transaction with Global Atlantic to basically reinsure our long-term care business, or a part of our long-term care business. And it was a business that most folks would have looked at through a lens of high risk and possibly low return. And to have transacted part of that block at an attractive price was something that the market noticed, and we were rewarded for that.
Right, I think you said 17% earnings per share growth.
Right.
You have a $48 billion or so market cap, but there's all this AI out there, technology sort of taking all the air out of the room. How do you attract investors? I mean, the 17% earnings growth goes a long way.
Indeed. So I think investors want a business that can deliver sustainable results in the long run. So for us, it is about delivering returns that are outperforming our peers. And for a number of years, we believe that we've actually been doing that. We grew, again, not just our earnings per share last year, but we grew our sales double digit, and we continued that into Q1 of this year. We had 20% core earnings per share growth and 20% sales growth, while our wealth and asset management business had positive net inflows of $6.7 billion. So investors typically want a business that they can rely on and have confidence will deliver value quarter in, quarter out. And we've made our business more predictable. But the other thing that investors want is a look to the future. They want to know that the business has runway. And again, given our unique geographic footprint, while some may be worried about an economic slowdown in North America, folks have realized that Asia is still going to be growing at 4 to 5%. And those are markets that are still low or underpenetrated from an insurance and wealth management perspective. And we provide that growth opportunity because of that unique footprint that investors are getting excited about. The return on equity story for us has been a very strong one. We took our return on equity from 11% up to 16%. And I think, again, that is something that shareholders are getting very, very interested in.
Roy, talk to me about leadership. I know you had sort of an interaction with an executive early on in your career that maybe shaped some of your thinking.
Well, yeah, I think leadership is an important facet of any executive's mantra and what they ultimately need to focus attention on. And I've been lucky to work with a lot of great leaders and maybe some not so great leaders who have taught me also what not to do. But leaders that I've been inspired by are typically leaders who, A, are able to come up with a vision for the future that's not necessarily guided by the past. So the ability to, A, think about what the future could look like and have that, again, be radically different to the past is certainly one aspect of leadership that I've admired. I think great leaders have also been those who have rallied a team around them, and a team who are high performing and are able to actually execute against an agenda. So for me, that's been an important part of my own personal philosophy is hiring awesome people who actually are better together than they are apart. You need to be able to execute. You can have the best vision for the future or for the world, but if you can't execute against that vision, then it's just a dream. And I think then a focus on execution is critical. And then finally, I would say that every organization needs to have a strong sense of purpose. People are inspired to work for a company or a leader where they believe that what they're doing actually makes a difference and it counts for something. And again, I felt that for a great leader to inspire people, they need to know that what they're doing is valuable and worthwhile. And again, for our business and for our company, we've got quite a powerful purpose that drives us and our people.
Was there a negative example, though?
Well, I think, again, you learn as much from the things that people don't do well. And I think, you have some leaders who are very controlling and want to micromanage, and that's not necessarily something that allows folks to thrive. So being careful of some of those pitfalls is, I think, an important part of, your own makeup as a leader.
Listening to you, I suspect you might have spent some time in the country of Australia growing up. Tell us about your story.
Well, you're right. I was born in Australia. I was born to migrant parents. My family, or my mum and dad, migrated to Australia from Italy after the war, as did many. And, we had a pretty humble upbringing, but one where we didn't really want for anything. And again, we had a great opportunity to sort of learn and get educated. And I went, firstly, straight out of high school and started working at Citibank at the age of 17. And at the end of the 3-month pre-university period, they asked if I'd stay on and continue working full-time whilst I studied at night. So I took them up on that offer and I stayed with Citi for 28 years. It was a great opportunity for me because it gave me an opportunity to learn the business of banking and the various aspects of banking, but they also gave me an opportunity to work overseas. So from Australia, we went to Singapore, where we were there for a couple of years. We went to Thailand for a few years, and then I was responsible for Citi's Asia retail franchise, and that gave me the opportunity to work across a whole variety of countries in Asia.
Right.
Before Manulife asked me to come and lead their Asia franchise, which I did in 2015.
My understanding is that you're keen on exercise, which makes sense given what you're trying to proselytize about a little bit, right? So you put your money where your mouth is, kind of?
Yeah, well, I think you got to eat your own cooking, and if you're trying to suggest or promote healthy living, it's important for you to do it yourself. But exercise and training is my release. It's the way that I burn off energy and I de-stress. I'm an avid triathlete, so I like
one of those people.
I'm one of those.
Crazy. Okay.
I try to keep active and fit, and I will typically start my daily routine with a session in the gym for at least an hour, and I'm lucky that I get to wake up early, and that's something that I try to do first off the bat, and then I'll get into the rest of my day. But I do enjoy exercise and training, and it's a big part of who I am.
Wait, so how many triathlons have you done, and have you done like some of those really big time ones, or the ones where the ultra marathons or ultra triathlons?
I've done one full Ironman.
That's what I'm talking about. Really?
Yeah, I've done one of those, and I've done probably 33, 34 half Ironman events and a whole lot of smaller distance events. But I love the idea of being able to do all three disciplines in an event, whether the swimming, cycling, and the running.
Right. And I think you're keen on sort of communicating to various constituencies. I understand you're on Instagram. You have a fun Instagram handle. I don't know if you want to share that with people.
Yeah, it's the Gori Details.
Gori, that's your last name,
on
Gori,
my name,
right? Gori
right.
Details. Okay, got it.
But I think you're right. I think what is critical for a leader to do is to be able to communicate with your team and the broader organization. When you have an organization of 40,000 people, 100,000 agents, folks at various levels in the pyramid aren't necessarily aware of what's actually going on and where the company's going or what their leader is doing or wants to do. So I think communicating is really critical, and you have to move beyond the standard traditional ways of communicating, be it emails or town halls, to looking at other vehicles for getting the message to the broader population of people that you're wanting to engage with. So I think the use of social media is an important vehicle for that. And it's one where especially the younger and newer generations are resonating with much more and more.
Yeah, and final question, Roy, as someone who grew up in Australia, lived there, and now living and working in Canada, but with a U.S. business, what is your perception, your take on the U.S. economy, the U.S. political system? How do you view the U.S.?
Yeah. Well, I think there's no denying the fact that the US is not just the largest economy in the world, but it is a powerhouse for the global economy. And yes, I think the US, like the rest of the world, is really at a bit of a crossroads in that you've got economies that are struggling with high inflation, and central banks around the world are trying to increase interest rates to tackle that inflation while at the same time not wanting to stall the economy. Mm-hmm. I think the sheer power and strength of the U.S. economy means that it will navigate that, is my view. I think the U.S. will navigate that reasonably well. And I think what matters less is if we have a 1 or 2 quarter recession, then what will it mean for the long-term success of the economy? And I think the undeniable truth is that the U.S. is really still a powerhouse of the global economy, and will continue to field significant growth, and will, in my mind, continue to navigate that scenario very well.
Roy Gori, CEO of Manulife, thank you so much for joining us.
Pleasure to be here.
This is at Barrons. I'm Andy Serwer. We'll catch you next time.